major customers, the credit period and likely quantity of TV sets that will be lifted by the customers are as follows. So if you see here in the table, they have three customers. This A, B and C are the customers, and this credit period 0, 30, 60 and 90. And if you give 0 days credit, A will take 1000 units, B will take 1000 units and C will not take any number of units because you are not giving credit. If you give 30 days credit, A will still take 1000 units, B will increase his purchase to 1500 units and C is still not purchasing. When you make it 60, no change in A, B is increasing the purchases and C has started purchasing, and for 90, again A remains the same, B and C increase their purchases. The selling price of TV is rupees 9,000. The expected contribution margin is 20% of the selling price. Cost of carrying debtors is 20% per annum. You are required to determine the credit period to be allowed to each customer and explain what are the problems the company might face in allowing credit period. So in this sum, for each customer we have to solve sum. So for customer A, we will first have to do 0, 30, 60, 90. Then for B and then for C. So there are three sums in one. Now, first, before we start solving the sums, I will ask you a simple question to see if any one of you can answer. If you look at customer A, when I give him 0 days credit, he is buying 1000 units. When I give him 30 days also, he is buying 1000 units. 60 days or 90 days also, he is buying 1000 units. Okay, so his purchasing is not changing, he is not buying more. So according to you, should I give credit to A or no? Anybody? What is giving credit?
Yes, ma'am.
We have to give credit to A or we should not give?
Yes, ma'am. We should give, ma'am.
If you give 30 days, 60 days, 90 days also, he is purchasing 1000 units. If you tell him to pay cash and buy, that is 0 day credit also, he is purchasing 1000 units. Then why you want to give him credit? Are you getting the logic what I'm trying to say?
Ma'am, can you repeat?
Customer A comes to your shop and you tell him, sir, we don't give credit, you pay cash and buy. So he says, okay, 0 days credit, I want to buy 1000 units of TV. He will take 1000 sets of TV and he will pay you. Next time customer A again comes to your shop and you tell him, sir, we give 30 days credit. He will say, okay, I want 1000 units, you give me 1000 units and he will go. Next day again if he comes, he will say we have increased the credit to 60 days. He still buys 1000 units and for 90 days also 1000 units. So even if you are increasing the credit period and you are telling him you can pay later, he is not willing to increase his quantity demanded. He is buying 1000 units only. You give 0 credit, you take cash, or you give 90 days credit. It doesn't matter. I want 1000 units, I will buy. So in that case, would you like to give credit to customer A, or it is okay if we don't give him credit period because he is ready to pay cash also and buy those 1000 units or 1000 TV sets?
Yes, ma'am, got it. So we no need to give credit.
Correct. There is no need to give credit to customer A because when I'm giving credit, when I'm increasing the credit period, he is not increasing his purchase. He will still buy 1000 units. You give him 0 days or you give him 90 days to pay. He says, whenever I'm going to pay, but I want only 1000 units. I'm not going to purchase more. So when we are giving him 0 credit, he's purchasing those 1000 what he requires. Then there is no need to give him credit period. So we will not solve it for customer A. Instead, we will write a note for him. So you can write customer A. This is the solution. In case of customer A, change in credit period does not affect the sales. Therefore, no credit period should be allowed to customer A. Therefore, no credit period should be allowed to customer A. Okay, again I'm repeating it for you. The main motive of the company to give credit period is to increase sales. When I want my sales to increase, I will tell the customer, you take and go, pay later, it's okay, I will wait. Okay, somebody comes to your business office and says, I want to buy so and so things. If I have to enhance the sales, I'll say, okay, you buy this also, that also along with it. If he says, I don't have money, you say, it's okay, you buy today, pay later. Pay later is giving credit, and we give credit so that we can sell more. In case of customer A, even if you give him credit, he is going to buy only that 1,000 units of TV. So sales are not increasing when we give him credit. Therefore, there is no need to give him credit. Okay, any doubts still here?
No, ma'am.
Now for customer B, we will solve. For customer B, when we give credit, his sales units are changing. So these are the 4 columns we will prepare now: 0, 30, 60 and 90 days credit. In the previous sum, we used to prepare existing and proposed, because there was existing option and one proposed where we increase the credit period. But here there is no existing and proposed. They are telling either you will give 0 days credit, or you will give 30 days, or 60 or 90. So there are 4 options with 0, 30, 60, 90. Is that clear? So similar way we will prepare the income statement. First is sales. Okay, what happens to sales? When you give 0 days credit, the sales of customer B is 1,000 units. Okay, so here I'll write the heading. I'm doing it for customer B. So in the first case, 1,000 units into, let's see what's the selling price per unit. The selling price of TV is rupees 9,000. So 1,000 units into 9,000. How much you get? 1,000 into 9,000, 90 lakhs. Okay. When you give 30 days credit, that is in the second option, he is buying 1,500 units. So 1,500 into 9,000 rupees is the price per TV. So 1,500 into 9,000, if you do, 1 crore 35 lakh will be your sales. Okay, then in the third case, when you give 60 days credit, customer A is buying 2,000 TVs. So we are going to take 2,000 units as sale here into 9,000 rupees is the price per TV. So 2,000 into 9,000 if I do, we get the sales of 1 crore 80 lakhs. And in the last case, that is for 90 days, if you give credit, he is buying 2,500 units. That is the highest purchase he is doing. So 2,500 units into 9,000. it comes
2
to
crore 25 lakhs.
2 crores 25 lakhs. So this is how the sales has been calculated for each option. Then we do less variable cost. Let's see what they mentioned about variable cost. Just see here, the contribution margin is 20% of the selling price. So how do you get contribution? After variable cost, we get the contribution, and contribution we get it by doing sales minus variable cost. So they are telling this contribution is nothing but 20% of sales. Contribution margin is 20% of sales. Okay, it will be always of sales only. So here also they have mentioned the contribution margin is 20% of the selling price. So that means 80% is variable cost. Are you getting the logic? Out of 100%,
Yes, ma'am.
20% is contribution. So 80% we will take it as variable cost. So 80% of sales is the variable cost. I hope it is clear. So we'll find 80% of sales now. So here sales is 90 lakh. 80% of 90 lakh is 72 lakhs. In the second option, the sale is 1 crore 35 lakh. 80% of 1 crore 35 lakh is 1 crore 8 lakhs. Third case, 80% of 1 crore 80 lakhs is 1 crore 44 lakhs. And in the fourth case, 80% of 2 crore 25 lakh is 1 crore 80 lakhs. So when we minus it, we get the contribution margin. So 90 lakh minus 72 lakh, if I do, I'll get 18 lakhs as contribution. Then 27 lakhs. 36 lakhs. And last 45 lakhs. So I'm doing sales minus variable cost for this. After that, we minus the fixed cost. You see here, they have not mentioned anything about the fixed cost. In the entire problem, fixed cost is not given. So we are not going to assume anything and take it. We will take it as 0 because it's not given. So there is no fixed cost. You will get earning before tax. Which is the same amount because there's no fixed cost. So you are not going to less anything. Then from this you will do less tax. There's no tax percentage also given. So tax is also 0. So you'll get earning after tax. Now from this, what we minus is the cost of less cost of additional investment. Okay. So for that, we need to do the working note first. So working note on additional investment. First, we find the debtors turnover ratio, DTO, is equals to 360 divided by average collection period. So in the first case, it is 0 days. So 360 divided by 0, so it will be nil actually. So there is no debtors turnover ratio here because it is 0 days. Next is 360 divided by 30 days. So what will be the debtors turnover ratio? 12 times. Next is 360 divided by 60 days. The debtors turnover ratio will be 6 times. And last 360 divided by 90 days, the debtors turnover ratio will be 4 times. So these are the days we are given above, which I have taken as 4 options: 0, 30, 60, 90. So we got the debtors turnover ratio. Now we can find the additional investment, and the formula cost divided by debtors turnover ratio. So you can also write variable cost plus fixed cost divided by debtors turnover ratio. Now, in our case, we have only variable cost because fixed cost is 0. So variable cost 72 lakhs divided by the debtors turnover ratio is 0. So it will remain as nil only. For 0 days, we
Is
will
equal.
not calculate because in 0 days, we are not giving credit. When we don't give credit, we don't need any additional investment. Only when we give credit, that additional investment comes into picture because our money is stuck up. We have given time for customers to pay. So if I need money, I will withdraw from somewhere. So additional investment I'll make. But if I get cash immediately, there is no need to make additional investment. So we'll start from the second case where we are giving credit. When there's no credit, there will be no additional investment. So 1 crore 8 lakhs divided by 12 times is the debtors turnover ratio. So you get 9 lakh rupees as then in the third case for 60 days, variable cost is 1 crore 44 lakhs divided by 6. That is the debtors turnover ratio. So you will get it as 24 lakhs. And in the last 90 days, the variable cost is 1 crore 80 lakhs divided by 4. So your additional investment will be 45 lakhs. Okay, now this is the additional investment. We can find the cost of additional investment and the percentage is given in the question. See, the cost of carrying debtors per annum is 20%. So 20% is the cost of additional investment. So 20% we will take of this amount. So of 9 lakh 20%. 9 lakh into 20 divided by 100. In the first case, it will be nil. In the second case, 20% of 9 lakh is 1 lakh 80,000. Then third option, additional investment is 24 lakh into 20% of 24 lakh, 20% is 4 lakh 80,000. And in the last, that is 90 days period, 45 lakh is the additional investment into 20%. You get it as 9 lakh. So we have to minus this from earning after tax to get the profit figure. So 18 lakh minus 0 is 18 lakh. And 27 lakh minus 1 lakh 80,000 is 25 lakh 20,000. 36 lakh minus 4 lakh 80,000 is 31 lakh 20,000. 45 lakh minus 9 lakh is 36 lakhs. So this is the profit. Now look at the profit and tell me which company has the, which option has the highest profit.
Last, ma'am, 90 days.
90 days. So we are going to provide 90 days credit to customer B, because when we provide 90 days credit to him, our profit is maximum. We are earning 36 lakh rupees profit, and which is beneficial for the company. So for customer B, we have finished and we have decided that we will give him 90 days credit. For customer A, we have already written here, we are not going to give him any credit, because whenever we give him credit, he is still buying the same quantity. So no credit for customer A, 90 days credit for customer B. Now let's do it for customer C. In case of customer C, you did not take the first two options, because when you give him 0 days credit and 30 days credit, he is not purchasing anything. So there are no sales at all. When there are no sales, there will be no income statement. We have to take only the last two options, that is 60 days and 90 days. If you take all four, it will be nil, nil, nil for 0 and 30 days. So instead of showing nil, let us not take it. Only two options, 60 and 90 days credit when you give him, he will take from you. So for customer C, we have to do it only for two options. I will show it to you below. Customer C. So only 60 and 90 days option we will consider for it. Okay, so let's start. For 60 and 90 days, we'll see what are his sales. For 60 days, he's selling 1000 units. So 1000 units into 9000 per PV is the price. So 1000 into 9000, we got it as 90 lakhs. So for 60 days, the sales is 90 lakhs. Then for 90 days, 1500 units is buying. So 1500 units into 9000 is the cost of TV per unit. So 1500 into 9000, it will come to 1 crore 35 lakhs. From this, we have to less variable cost as we did in customer B. Same we are following here. 20% is contribution margin. So that means 80% is the variable cost. So 80% of 90 lakh we have to take as variable cost, which comes to 72 lakhs. And 80% of 1 crore 35 lakh, which is 1 crore 8 lakhs. Contribution, sales minus variable cost, if I do 90 lakh minus 72 lakh, 18 lakh is contribution for 60 days and 27 lakh is contribution for 90 days. Fixed cost is not given in the problem, so we take it as 0. Then we get earning before tax. Tax is 0 again. So if you minus 0, you will get the earning after tax. Now cost of additional investment. We'll do the working note on cost of additional investment. So debtors turnover ratio 360 divided by 90. You get 6. Sorry, 1 second.
For
60
60.
and 90. So 360 divided by 60. You get 6 times. And 360 divided by 90. You get 4 times. Now cost is only the variable cost in the problem. That is 72 lakh divided by 6. 6 times is the debtors turnover ratio. So you get 12 lakh as additional investment. In the second case, the variable cost is 1 crore 8 lakhs divided by 4 times the debtor's turnover ratio. So you get 27 lakh as additional investment. Now we have to do the cost of additional investment here. So in the first case, 12 lakh into 20% because that's the rate given, 20 divided by 100. So you get 2,40,000. And in the second case, the additional investment is 27 lakhs into 20%. You get 5,40,000. You can minus this from earning after tax. So 18 lakh minus 2,40,000, you get 15,60,000. And 27 lakh minus 5,40,000, you get 21,60,000. So in case of customer B, how much credit you will give him? 90 days, because the profit is highest in case of 90 days. So customer C should get 90 days credit. Customer B also should get 90 days credit, and customer A will get no credit. Okay, so customer A no credit. I will write it here only. B will get 90 days credit. As per calculations below. And C will get 90 days credit as per the calculations that we have done. Okay. Now there is another question asked. You are required to determine the credit period to be allowed to each customer. So we have determined A will get no credit, B will get 90 days, and C will get 90 days. And explain what are the problems the company might face in allowing credit period. So can anybody tell me what problems the company might face if I give 0 credit to A, 90 days credit to B, and 90 days credit to C?
Ma'am, recovery.
Recovery. Okay, that is an issue which almost everybody will face. But what other kind of problems? Okay, let's take an example. Suppose customer A is Sonam, customer B is Soumya, and customer C is Kirti. Okay, so Sonam, Soumya, and Kirti are my 3 customers. I give 0 credit to Sonam. I give 90 days credit to Soumya and 90 days to Kirti. Now Sonam gets to know this from Soumya and Kirti that I am giving them time to pay. I am giving them 90 days time to pay. So what do you think? Sonam will keep quiet and she'll say, okay, let the person give you time. I don't need any time. Yes, Sonam, what would you do?
Ma'am, however, I'm buying the same units.
Yeah, but others are getting more time to pay. So you don't have any objection with it?
Yeah, I do have.
Yeah. So that is the first problem. Customer A, that is Sonam, will not be happy if I give 90 days credit to B and C when she gets to know. So she will say, you give me also 90 days time to make payment, or else you give me cash discount because I'm paying you immediately. So I'm buying 1,000 units and giving you cash immediately. You need not wait. So when I'm paying promptly, either you give me some discount because I'm paying you cash, or you give me 90 days time like you have given to B and C, that is to Soumya and Kirti. So this is the first problem. Is that clear, everybody?
Yes, ma'am.
Yes, ma'am.
Okay. Now the second problem. So what the person will do, he will either give discount or he will give her credit. So whatever the seller will decide. The second problem is, now Soumya gets to know that she is getting 90 days credit and she is buying 2,500 TVs. Whereas Kirti is also getting 90 days credit and she is buying only 1,500 TVs. So now Soumya, how do you feel when you're treated same, when even if you're buying more? So Soumya will also feel bad, obviously, because she
Yes, ma'am. I want to have more than 90 days, ma'am,
correct.
because
So
I am purchasing more units.
correct. So Soumya will say, I am purchasing more units. So either you give me more than 90 days credit or you give me trade discount. What is trade discount? At, at the time of paying cash, when you take discount, it is cash discount. So Sonam says, I'm immediately paying you cash, you give me cash discount. But Soumya is saying, I will pay you later, but you give me trade discount. Trade discount means you charge me little less in the MRP only. Instead of 9,000 rupees per TV, you reduce the price for me because I'm buying in bulk. Whenever you go to any shop and you buy something in wholesale, the wholesale rate will be different and the retail rate will be different. If you're going to buy only one bottle of certain thing, you'll have to pay the MRP. But if you buy 6 bottles or you take the full box, you usually tell there is no discount or what, I'm buying on bulk, I'm buying a huge quantity. So here Soumya will say, I'm buying in bulk, a huge quantity compared to Kirti. So you either give me trade discount, that means you reduce the MRP, or you give me more than 90 days time because I am buying more than Kirti. So these are the two problems that will be encountered by the company if they give different credit period to different customers. So we will write down those two. I'll type it here, you note it down, or later when you write down in your books, you can note it down. The first problem, when customer A, I hope it's clear. Anybody having doubts?
No, ma'am.
No. When customer A gets to know about 90 days credit given to B and C, he will demand for the same credit period or for cash discount because he's paying immediately. So he will say either give me discount or you give me 90 days time to pay. The second problem is when customer B gets to know about 90 days credit given to customer C, he will ask for more credit period or trade discount as he is buying in bulk. So these are the two problems that the company will encounter. So this question, explain what are the problems the company might face in allowing credit period. The answer to that I have given here, problems faced by company in allowing credit period. Okay. So this was the problem, the 13th sum. Anybody having any doubts?
No, ma'am.
No, ma'am.
So let's go to the next sum, that is the 14th one, and maybe the cash discount thing we will start in the next class. And hopefully I'll take a class on Saturday. Okay. There's a very short time left.